Yo, good evening, guys. So I'm going to show you guys how I backtest or how to backtest like a pro. Although I'm not a profitable, but with time, get there. So this is my charts. So let's start from somewhere. So first, let me remove this things on my charts. And let's use a fresh new chart. Let me find another chart I've not backtested. I'm going to go to where I've not traded before, probably like that. Then, based on my strategy, the first thing I look out for is my bias. I don't just enter trades anyhow. I trade structure, liquidity, and POI. That's what I trade with, basically. Very simple concept. Nothing much, nothing too complex. So, first thing I'll look out for my directional bias. So, let's go to where we don't know. Let's go to a random place. So, let's try here. I don't have the paid um trading view. If not, would have pushed it back, and replayed it. But I don't have the paid. First, what I do is I use this horizontal tool, and I place it where I know that markets are probably giving me a good bias. You get now looking at this markets, look out liquidity here. This is weak rejection liquidity. That's what we call it based off my strategy. But this is a normal thing, sha. I don't know if you guys know it, but this is weak liquidity. Markets came and took it out. So now, what we'll be expecting is sales, but we don't just jump in once market has tapped into or has given us a good bias from the higher time frame. Don't just jump in on the lower time frame. Wait for it to trade below that zone. So we must start trading below that zone. What we do now is go to lower time frame. Let's say you go to 15 minutes or you go to 30 minutes time frame. So it's far. Mhm. So now we know the bias. The bias is what sales. So we'll be looking for sales until market gets to where, sorry. So now that we know that bias is sales, we'll probably be looking for sales until market get to this support zone. So now right, we are trading based off of bias to this support zone. And call it a support zone. You can call what say another block. But I'll put it in the word support zone to go to 15-minute time frame. So now we'll be looking for sales probably until market gets to this support zone. That's when we can now change bias. So looking at what's happened there, in the daily market took it out. We were waited for market to start trading below that one. Until it start trading below that zone. I don't know if you guys are seeing what I'm saying. Based off my strategy, how I trade basically. Break of structure, first value pullback, POI, or sweep of liquidity, market structure shift, POI. So that's how I trade basically. Looking at it, market trade trading below that zone, fine and good. Now let's look for um, setups based off my strategy. Hmm. This will not allow us to do. That it it not allows us to go for that. But let's use 15, let's use 15 minutes time frame. But my PI will be clear on the 5 minute time. That was why I went to 5 minute time frame. But we can still manage 15 minutes. We're looking at this. Market didn't give us any setup around there until it dropped to this zone. You get, so this was break of structure. Sorry, break of structure. Okay, I'm currently in my room though. I'm not alone in the room. We are like, this is like a room of six, basically. But we are currently five in the room. Sha. So looking at this break of structure, first value pullback. Now, where do I use as my PI? I use breaker block as my PI. But looking at the market, ignored our breaker block. Came here, tap into another block above here and sold up. If you noticed. So this is first trade, trade one. Basically, our tip will be here because this is the origin of this whole setup. So that will be our tip basically. Just look for that sell setups. So as you can see, basically we did not catch much sell setups. We caught only one sell setup, and this was over 750 pips. So let's continue going. Going to the 4 hour time frame now. You see what market did there. It dropped to this zone. It gave us another block zone here in the 1 hour. Give us another block zone here in the 1 hour. So personally speaking, using buyers now, we have traded for this previous time. As now we're focusing on current price action. Looking at the market tap into this other block that you see here. So now let's put this guy here. So now our buyers have changed. So we are not look, so we are no more looking for sales, we are looking for buyers now because market has changed to buyers. That's why if you notice a week I can be taking sales throughout that week. And next week you see me taking buys. That's because I know the current direction of the market. I don't just trade now. So now looking at this, you are seeing the market has tapped into a zone on the higher time frame. So we go to lower time frame and look for setups based off the strategy we trade with structure, liquidity, POI, break of structure, first value pullback, POI. That's what we trade with basically. So now market is trading above our zone. So now we start looking for buy setups based off our strategy. Now you guys see this. Or you can use this as break of structure too. This guy here. Break of structure, first value pullback. So where is our PI? Our PI is PI closest to liquidity. That is this breaker block here, this guy right here. So we have first buy setup here. So which other buy setup do you have here? Let's go out. Break of structure, first valid pullback. Now look at this. The rules to getting good PRs. Your PR should be not should be unmitigated. That is the first rule. Second one, it should be the one closest to liquidity. That is the reason of picking your PI. Look at this now. I use breaker block and other blocks as my PI. But looking at this now, breaker block that is there has been mitigated by our liquidity. So we cannot possibly use this as PI. So where do we use as PI? We use other block around this zone. So now looking at it now, this is other block as at this zone. So we use other block. So this is now our PI. So now currently now we have two buys that I've got from getting bias on higher time frame. So we have got two buys so far. So let's keep going, let's keep going. Let's see if we get more buys. So can you guys see this? I would have taken this trade. There's no how I would have missed this. This was a mad nice trade. It was a very nice trade. So where's our pair? Our pair is breaker block right here. Now can you see this? This breaker block was not mitigated by anything. And mitigation, you don't call this mitigation. Mitigation was happens after break of structure to the opposite direction. So like after break of structure, let's say market told something like this and comes here again. This is not mitigation. Mitigation will happen after it has broken above here, then comes back into this zone, taps into it, buys again. Then you cannot possibly use this as pure again. You pick the nearest other block below it as pure. So this is what we call mitigation, not this and not this. So we'll be calling this mitigation that mitigated it. What is this? This is not mitigation. Mitigation happens after break of structure. This is when you say, okay, this pair has been mitigated. Let's look for the next pair to use for this setup. And that's why most of you lose trades or you miss out on good trades because you feel like market mitigated before breaking structure to the opposite direction, which is wrong. Let's go to the higher time frame. Let's see if market change character at some point, or if we have any need to change bias at some point. So looking at this, there's possibly no need of changing bias. But on a normal day, since we had general bias from general buy bias, would have marked out this zone, this resistance zone, as a zone that would have waited for market to come. So these are 4 hour resistance. 4 hour resistance zone. We have marked out this one and be like, okay, once market gets to this zone, we'll pick sales. That's when it starts trading below. Now market tap into it, say rejection and broke above it. So once market closes above that zone, that's anything sales cannot hold again, except it's closed above and enters back into the zone and start trading below that zone. But in the case whereby it breaks above and start trading above, then you continue looking for your buy bias or your buy structures. Looking at now, market broke above and it never came down because general marketing was bullish. Although we trade with bias to like to pick trades based off market current trend. But in terms of what's happened there. You cannot possibly pick sales just because that happened to your 4 hour resistance. That's why I say you should wait for it to trade below that zone to be sure that this is actually reacting from that zone. So now we'll continue looking for buys until market does what it wants to. But in cases like this, you just wait for market to go, we give you support zones. Then once it has bought to this kind of level, you wait for market. Once you see market retracing, you just leave market. Then looking at the market give us a zone here to be taken out. This is weak rejection liquidity. It gave us this one to be taken out later. And our market took it out and straight buying give us like a scalp buy. So let's continue looking for buys. Let's see if we get more buys before market straight drop now. Mostly any buy opportunity again, sure. But I think that would be all for the buys. Not the buys from this one here, we do not have any other buy opportunity. So it came all the way to this level, dropped. So looking at it, the market took out weak rejection liquidity, weak liquidity and straight buying. So from this one, we start looking for buys. Let's let's see for buy setups. Okay, we got structure. So this would have been the first buy I would have taken. Like a scalp buy, do. This value pullback. So where's your appearing? It's appear. Open trade, pick of structure. Where's value pullback? And where's your appear? You just break up block five. I've got two trades so far, right? Bit of structure as well as the back. PR. Although this one not get to full TP though. Some I have stopped those styles. That's if you broke you so early. That was it for the bias. So it started to a zone around there. Then the rest selling. We are done for this zone. This bias here. We're looking at from this some people were still trying to buy good at that moment. I had sales setups, posted and they were like going to get the trend. I was like, markets was about to change character from that zone. That this is another block from the 1 hour time frame. Market was reacting off of. Mind you, I did not enter until started trading below that zone. So are you seeing this? Yeah. So immediately markets tapped into that other block, straight dropping. And I saw sweep market structure shifts. First value pullback, which is our inducement or liquidity. And it gave us PIRA. Look at this trade, sweet. So this was the first trade. The second trade probably, I think it was, yeah, this is it. Break of structure, first value pullback, PUI, sorry, and PUI here. So is this the second trade that happened? Then the third trade, I report break of structure, first value pullback, PUI, roll all the way down to full TP. Before market came and broke above that zone. This it was sold, other sales setups, graph, but okay, bit of structure, first value pullback. We will not be a PI, that block. That I meant to try now. 4 trades, I think so. Yeah, four. We have this break of structure, first value pullback, PI. I think that was all for the sales until it's tapped into a zone in the 4 again and still reversing. So that's the importance of directional bias. Once you know the bias of the market, it makes trading much more easier for you. I think that will be the end of this section. Hope you guys enjoyed this. Yeah, that would be the end of this section. Thank you guys, and please watching to the end.